Hi all, welcome to the first instalment of Army's Money Talks. I'm here with Director and Portfolio Manager Brad King. We've just finished up our weekly ICM. Brad, we had Adrian Prendergast from Morgans join us today, who's a oil and gas analyst. Maybe just touch on a few of the more interesting points that he spoke about today.
Sure. Yeah, we got Adrian in just to, I suppose, cover off some stocks that we probably haven't looked at for some time because of really where you look at oil and gas back in, or energy as a sector, say 5-10 years ago, it used to be quite a significant part of the index, and now it's roughly sitting at around about that 3% weighting. So a lot of people have chosen to avoid it, and certainly from an ESG screen, there's been companies sort of looking at doing different things to try and offset some of those concerns going forward. So it has been a sector that's been unloved, and if you have a look at the oil price, which has been quite stable around that sort of 73 buck level, and then now we've had a little bit of a kick until last night, but having a look at the spot prices coming through some of these oil and gas balance sheets, the market is starting to add a bit more price momentum to some of these stocks.
Yeah, I think one of the points that I sort of took home was around where it's sort of cuddling trading on a Ebitda metric. I think around 5.5 times, and Ebitda, where historically it's been around 7.5 times. So based on those sorts of metrics, you think there still might be a little bit more room to grow?
Yeah, I definitely think so. The other also thing that was mentioned at 5.5 times, if you put through spot, you're closer to 5 times. So if you assume prices have some stability around here, they look very, very cheap relative to their sort of historic norms. And having a look at where we're seeing basically the disruption in energy markets at the moment, because we're trying to put renewables into the system and grids can't cope. So there is sort of almost a retracement back towards some of those traditional fossil fuels.
Yeah, okay. And I guess sort of on the other side of the argument, Adrian was quite bullish on oil and gas. I mean, if you factor in some of the other big sort of global economy stories that are actually starting to come to fruition now. You've got sort of the US debt ceiling coming to a bit of a head. You've got the Fed and central banks potentially unwinding stimulus. You've got the Australian government announcing that they're removing all COVID stimulus. Mm-hmm. You've got brokers paring back a lot of their global growth assumptions. I think Goldman Sachs came out and said China next quarter is going to be 0% growth in their GDP. So, I mean, how do you sort of factor in those things, against a bullish argument for oil and gas?
Yeah, I think if you also follow the money, right, from a flow perspective, you're getting a bit of sector rotation. So you have a look at the NASDAQ getting knocked about the last few sessions, and because if you put a higher bond yield, because you're assuming there's going to be some inflation coming through, then those higher growth companies from a discounted cash flow perspective start to look quite expensive. So looking at an oil and gas stock, which actually has an Ebitda versus something that is really a revenue growth story, some of that money then comes back to that value argument, even though it is still, there will be certain funds that will not invest in them, but at least from a cash flow perspective, you're getting demand, and the supply response from OPEC hasn't really been there. The Russians haven't really stepped in either to sort of push supply down for the market, which I think a lot of people were probably waiting for. And look, I think a large amount of people are sort of risk averse from that negative oil price that we had at the start of COVID. So, and the one thing that I still think is a bit of a sleeping giant, like even if we have a slowdown in some of that GDP growth, is the airline industry. Like once that travel sector gets up and going, that could give another leg to the oil price.
Yeah, you're not going to see too many people flying on electric planes anytime soon.
No, when your average car's 700 kilos heavier for a battery, a plane's not going to get off the ground, I wouldn't have thought.
All right, great stuff, Brad. Right, that's all we've got time for today on Army's Money Plays. Hopefully that was insightful for you, and tune in next week for our second instalment.